Welcome and good morning, everybody. Welcome to Benzinga All Access. It's Friday here at the end of the week. We're going to bring on two companies today and get you an inside look at what they're doing in their industries and their sectors. We want to get started, of course, with a couple of notes. First of all, we want to welcome and thank our sponsor, Ticker, for sponsoring every single All Access show this year. We're going to play their intro video so it explains how to get involved with Ticker really quickly, and then we'll get into All Access.
What is Ticker? That's right, Ticker with two I's, just like you, because it's for you. For investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
At ticker.com, that's Ticker with two I's. We want to thank our sponsor for the show and, of course, all of the companies that participate in Benzinga All Access. We're going to go ahead and get rolling here this morning. We're going to bring on Dr. Lynn Kirkpatrick, the CEO of Ensysce Biosciences, and get started. Dr. Kirkpatrick, welcome. Thank you for joining us. How are you?
I'm fine, thank you. Nice to be here.
It's great to have you here. Yeah, great to have you here. Very excited to get started. Give us a brief introduction. This is your first time on Benzinga All Access. Tell us a little bit about Ensysce Biosciences, what the company's stated mission, and what you guys are all about.
Great. I'd love to. Ensysce is a clinical stage company. We're using sophisticated chemistry to improve prescription drug safety, reduce abuse, and overdose. We have two technology platforms. We use the acronyms TAP and MPAR. And really, we're focusing on TAP initially to address the ongoing opioid crisis. Our lead product has been evaluated, and it's using the TAP technology. And really, TAP means trypsin activated abuse protection. You have to swallow our products in order to be exposed to trypsin, which activate or essentially turn on the products. And our lead product is a painkiller based on oxycodone. When it's exposed to trypsin, which is found only in your gut or your small intestine, the exquisitely potent painkiller is released to help people in severe pain. So our focus is really, and ultimately our goal is, as shown on our deck, slide 6, that we are creating a new class of pain products that, one, are hard to abuse, two, are differentiated from other products on the market, and three, can be layered with overdose protection, which is our second platform we refer to as MPAR. MPAR stands for multi-pill abuse resistance, and effectively this is overdose protection. The more, if you take too much of your pain product, it will ultimately reduce the amount or turn off the activation.
Got it. Okay, so Lynn, there's a lot in what you said there that I'm really excited to dig into. Before we start talking more about this, can you give us just a quick recap of your background, how you came to be at Ensysce, and just some of the background here of how things got started before we delve into the technical side?
Sure. Well, I'm ultimately a medicinal chemist, but I have been working with Ensysce for since its inception. This technology was developed in-house, and we're very excited to be bringing these pain products as well as other products forward. Certainly we, as I mentioned, are in the clinic. We anticipate being able to move these products further along and get them into the market as quickly as possible.
Understood. Okay, so give us a little bit of sense of scale as we start off here and start discussing the business and what exactly you guys do and get into the details. How big is the potential addressable market for what you're doing at Ensysce? How big do you think the opportunity is, and how big do you think your personal opportunity is at Ensysce for what you guys are doing?
Sure. As you know, the pain market globally is in the billions. Most recently, the opioid prescriptions have been declining based on the restrictions that a lot of governments have put on prescribing, but that still leaves a multi-billion-dollar market, not only in the States, but globally. And we're focusing here on severe pain, providing exquisite pain relief for those suffering, but also ultimately safer products to hopefully prevent the abuse we've seen over the last decades that hasn't been addressed previously, and providing people comfort when they have to take very potent pain relievers for their severe pain.
Got it. Now, I'm glad you brought up the abuse of prescription drugs and opioids and everything else, because as we all know, it's a huge problem, especially in today's culture, in today's country. What would you say, if you're looking at Ensysce specifically, what are you guys doing to make a differentiation in the abuse of prescription drugs and opioids? What are you guys doing differently that sets you apart from your competitors to address this issue?
I'm glad you asked, because we really feel we have the next generation of opioid products. Over the last decade, the segment has been developed into what's known as abuse deterrent formulations, or ADFs. And these are physical means that companies have tried to address to make pain products release slowly over time, but also be hard for people to extract and abuse. And we know that hasn't solved the problem. We're using a chemical approach. So rather than a physical hard shell or gel or bead type approach to release the product, we have chemically modified the opioids. These opioids are not active, and they have to be swallowed, as I mentioned, to be exposed to the enzyme trypsin. And trypsin is what all of our bodies produce to digest meat. Everybody has it, but they only have it in their gut. You can't chew our products to make them work faster. You can't crush them and inject them because we don't have trypsin in our bloodstream. And as some people do, they crush and snort the products. We have no trypsin in our nasal passages. So ultimately, recreational drug users, we feel, will not like our products. They have to be swallowed. Our lead product, PF614, slowly is converted over 4 to 6 hours into this opioid. And the biggest differentiation that we've managed to demonstrate clinically is that we also have a longer half-life. So pain products that are now prescribed, although they're prescribed twice a day, they don't last twice a day. So individuals who do get pain relief from these ultimately find before their next dose, they end up cycling back into pain before the pain product can kick in. Ours has a 12-hour half-life, meaning it ultimately would be prescribed twice a day, and the pain relief should last twice a day. So we have a number of differentiating factors. One, we feel our abuse protection is far more significant. We have this 12-hour half-life, and with our overdose protection, as I referred to as MPAR, we have something very unique in the industry. Other products do not have oral overdose protection.
Absolutely. That makes a lot of sense. So let's talk a little bit about recent clinical news, right? When you're talking about what you guys are doing in the space, combating the prescription drug overdoses and the opioid overdoses, what are you guys working on in your drug pipeline specifically? And what's some recent clinical news that we can look to understand the significance of what you're working on?
Yeah, terrific. As I mentioned, our lead product is PF614. It's a chemically modified, or TAP, oxycodone product. We've taken this over the last year through what's known as a multi-ascending dose study, comparing it head-to-head with OxyContin. As we know, that's the leader in the marketplace in this segment. We believe we can effectively replace OxyContin in the marketplace. We've identified dose ranges that will do that. We've also undertaken what's known as a bioequivalence study, showing that we have equivalent doses that do match OxyContin. In fact, that means the pain relieving product in the blood is measured exactly the same over the period of time. The advantages we have are our abuse deterrence, our potential overdose protection, and this longer half-life. So additionally, besides this bioequivalence, which is important in that it allows us to move through the regulatory pathway through what is known as the 505(b)(2) path, potentially a shortened path to registration. We've also initiated what are known as human abuse potential studies, which the agency requires for any abuse deterrent labeling. And these ultimately take recreational drug users to either inhale our product or take our product orally and compare that. And they're really called liking studies. Do they like our product as much as some other product that they can abuse? We've completed our nasal abuse study. We are awaiting data for that in the next 3 to 4 weeks. And we're initiating the oral human abuse potential study, and we should have data with that in early 2023.
Excellent. Okay, very much looking forward to that. So now that we've got a handle on the recent news, right? Can you tell us anything else about your other or your drug products in the pipeline? Anything else you guys are working on? Anything else that we should be aware of before we start talking specifically about the recent trials?
Certainly. As I mentioned, we have the TAP prodrug PF614. It's moving through the bioequivalent, or it's completed the bioequivalence, moving through its drug labeling studies. And with that, as I mentioned, overdose protection. We've initiated the combination study of PF614 with the trypsin inhibitor that's combined with that for overdose protection. That is in phase 1 clinical trial, and we've evaluated actually the component in MPAR, which is a protease inhibitor called nifamostat, in a phase 1 clinical trial. And it also has other utility, both for infectious diseases as well as other respiratory diseases, which we're also exploring bringing along in the pipeline. So currently we have the TAP prodrug PF614, the TAP MPAR PF614 MPAR in clinical studies, and the individual agent nifamostat for infectious diseases.
Fantastic. Okay, now you've talked about it a little bit, but let's start to look ahead into 2023, right? You referenced the things that you guys are looking forward to achieving and the things that you're planning on doing then. But what does the year of 2023 look like as a whole for the business of Ensysce? What are you guys looking to achieve on the clinical side, with your trials, with financing of the business, anything else? What are some big goals you guys are looking to run down next year?
The initial goal with PF614 is to complete our human abuse potential studies, both our nasal and our oral studies, which are ongoing. Ultimately, then we plan our end of phase 2 discussions, because we do have this ability to go directly to phase 3. We are planning our phase 3 studies at the moment with our clinical advisory board, putting those in place. And ultimately, as you mentioned, financing is important to put that in place so we can seamlessly move into our phase 3 program. We're evaluating our PF614 MPAR, and this has been supported through the National Institute on Drug Abuse, in that we have been awarded approximately $11 million grant, which is financing that program. And ultimately, we'll be looking for funds also to move the overdose protection forward through the end of the year. It's financed right now through mid-2023.
Got it. Okay, now there's a couple of questions I have for you on that side and what you guys are looking for in 2023. Before I go too far, we do have a couple of questions from our audience. I want to make sure we run through those. Orange's Options asked us, who are your competitors in this field? Can you speak a little bit to other people in Ensysce's space that are competitors for what you guys are working on?
Well, any pain product is a competitor, but ultimately everyone is looking for that holy grail to have a product for severe pain. To date, nobody has been able to identify anything other than an opioid product. So head-to-head, PF614 is an oxycodone product. Our main competitor is OxyContin, the Purdue product. And the second agent in that abuse deterrent formulation space is called Xtampza by Collegium. There are other attempts to identify new products for pain, but they're definitely farther along or farther back in development, and ultimately nobody has been able to provide the efficacy. So our direct competitors are OxyContin, the lead in the market, and Xtampza, which has been gaining on OxyContin.
Got it. Now, another question from our audience too: is there an FDA fast track for this product? Any insight you can give us on the FDA side of things?
Absolutely. We do have FDA fast track for the use of PF614 in the chronic space. We're exploring other opportunities as well, both breakthrough status or potentially fast track status for other indications. And as we explore our phase 3 pathway, we'll be looking at other regulatory opportunities. We do have this 505(b)(2), as I mentioned, with bioequivalence, which should allow us a slightly abbreviated path to registration as well.
Understood. Okay, and then one more from our chat as well. I think you touched on this, but when are trials getting released? When is the RS? Do you have any timeline on the release of the results for the trials that you're working on?
The clinical portion of our nasal study is complete. We are right now waiting for our database lock, anticipating that, as I mentioned, in the next 3 to 4 weeks for our nasal human abuse liability study. This is important, as I mentioned, for labeling claims. Our oral human abuse potential study is just initiating. We're anticipating having data for that end of first quarter in 2023. Ultimately, our MPAR, our combination product study, is moving through its first study. It's going to be extended into 2023, but we'll also have data with that for the initial portion of the combination study at the end of the year.
Got it. Okay. Now, another thing that I wanted to touch on, and somebody else in our audience brought it up too, but Ensysce partnering up with another company. What's the role of this other company that you guys are working with? Do you have any insights for us there?
That was an announcement by our partner in clinical development, Quotient Sciences, which has a very unique platform for evaluating products in real time. It's called translational pharmaceutics. Their ability to manufacture, test clinically, and move back into the clinic or back into manufacturing processes in real time, which allows your clinical development to be much smoother and quicker. And we've really enjoyed working with them with our MPAR product.
Outstanding. Okay, good clarification there. We appreciate that. And another thing I want to do too is I want to take more of a personal note on this, right? Because you've walked us through the technical side and the clinical side of what you're working on. But when you look at this from a personal angle, what are you most excited about for the potential of what Ensysce is working on? How big of a difference and an impact do you think this can make? And where do you see this company going inside the next 5 years? What does the roadmap ahead look like for what you guys are building?
Well, as I said, our goal is to produce an entirely new class of pain products for those people suffering in severe pain. Now, what we also want to do is prevent individuals from abusing products and having fears of taking opioid products because of fear of the problems there is in the opioid space. So ultimately, we feel our products are going to save lives and really provide patients options. And we're talking about patients with cancer, patients with severe pain, any type of major surgery where you have that exquisite pain. These products are really essential for, but as we know, opioids have taken a bad rap over the last few decades. So I'm hoping we can address that problem as well as alleviate suffering from pain.
That's wonderful. It's a big initiative, but it's a wonderful initiative too, right? What you guys are working on is incredibly impactful. And a last question for you too, is we zoom out and look at not just your industry, not just your sector, but of course it's safe to say that over the last couple of years, we've had a very interesting climate, to say the least, with the highs and much more recently lows in the stock market, the world as a whole being taken by storm by the COVID pandemic. When you look at things from a macro perspective, are there any challenges you think the company is going to have to overcome over the next few years that have been caused by the markets, the macro climate we're looking at? Anything else that you think Ensysce is going to have to face and overcome as a company?
Well, you've hit them all. Certainly, the market has not been kind to biotech companies over the last 6 months. Originally, COVID-2 pushed everybody's timelines because of access when they were scrambling to produce vaccines. It made it more difficult for small companies to be able to access the development that they needed. And ultimately, we need to weather this storm. We believe we can. We've been successful for the last 2 years. We're moving very aggressively to move our product through the development. We have excellent clinical partners. And right now, we're trying to stay lean and mean to get through the current storm and look forward into 2023 when I am hoping things are changing.
That's amazing. Well, Lynn, like I said, it's a big initiative for sure. What you guys are working on is a massive problem, like we've stated, right, in our market and our culture. What you guys are working on is certainly admirable. It's been wonderful having you here for your first time on Benzinga All Access. Dr. Kirkpatrick, thank you so much for being with us.
Thank you very much as well.
It's an absolute pleasure. CEO of Ensysce Biosciences joining us there, Dr. Lynn Kirkpatrick. We are going to move into our next guest and finish up with our second speaker of All Access for the day. But before we do that, we do want to mention the giveaway in All Access that we do every single week, a $100 giveaway by scanning the QR code on the screen or filling out the form in the link below the video. You can fill that out and enter to win. Again, we only have 15 to 20 people filling this out every week with over 100, 200, 300 viewers every single time we do this. So there is a good shot of getting a $100 giveaway when we do that. So fill out the form in the link below, scan the QR code on the screen, but we're going to continue to keep things moving. We're going to move in with our second speaker, Brian Guin, the CEO of United Energy, and keep things moving. Brian, thank you for joining us. How are you?
Hey, doing well. How about yourself?
We're doing great. It's a pleasure to have you here. It's a sunny Friday morning. It's getting cold up here in Detroit, but we're looking forward to fall. It's going to be a nice season, so we're looking forward to it. But Brian, kick things off for us. Tell us a little bit about United Energy. Where are you coming to us from? What is the company all about?
Yeah, so United Energy is based in Plano, Texas. I was on a show a few months ago. Had a great time. Introduced kind of a higher concept of the landscape of the oil and gas industry, primarily natural gas, which is where we're focused in. So we're based out of Plano, Texas. Our properties are in Oklahoma, northeastern Oklahoma, southeastern Kansas, in a little basin called the Cherokee Basin. It's a mature field. We found a home there, and so we're building quite a bit of acreage and quite a bit of production. And so that's what I hope to talk to you today about.
Outstanding. Okay, no, we're excited to chat about all of that, everything you just brought up, and a lot more too. We've got plenty in the tank. So let's start off. Give us a quick look at the last 6 to 12 months for United Energy. What have you guys been working on? What are some significant achievements? We're going to talk about some of these in more detail later on, but give us a high-level overview of the last year. What have you guys been up to?
Yeah, so we started, I took over United Energy in April of 2021. The company really didn't have a business model or a management plan. And a management, to build out that company. So the initial struggle was to put the company together, put the management team together. We were just coming out of COVID. We were about a year behind schedule where we wanted to be. We looked at the landscape just like everybody did in 2020. We took a step back, really had to assess where we wanted to go after COVID, after we out of the economy and the country kind of came out of its shock at what was happening around the world. Natural gas prices, oil had all gone to record lows. There was a feeling in the industry actually at the time, and I've talked to many of my colleagues about it. It made you question, why you got into this industry. It almost felt like it was never going to come back. And so at the beginning of 2021, we started looking at some of the opportunities that were in front of us that had not existed the year before, right? So we looked at COVID kind of as a capitulation in the industry. There were oil and gas operators and companies that were barely hanging on as it was. And so then you introduce this black swan event where demand, there's just the demand destruction, travel, ceased to exist practically. So the need for oil diminished rapidly. Well, those companies that were hanging on, a lot of them did not make it through that process. Well, fortunately, we were ready and willing and able at that time to step into certain markets and pick up properties that were really pennies on the dollar, really a great value, but there were sellers that are in those areas that wanted to sell, and they thought that this was a great time to get out. Well, we saw it as a great time to get in. So natural gas was trading about $3 an MCF at the time. And I remember And that's up from $2 an MCF. And it's just so hard to make money as a natural gas operator at $2 an MCF or below. That I'm thinking if it could just get to $4 or $5 an MCF, we could really turn this area around. We could make some money. And unfortunately for them, fortunately for us, that natural gas price continued to climb. We almost hit $10 an MCF earlier in the year. We're now trading between $7 and $8 an MCF. So our pro formas that we had built, going into this field, are 3 to 4 times, what we thought they were going to be. So where we've come in the last 6 to 12 months is we've been able to acquire our acreage, which is really step number one. If you're going to build a company, you got to have your assets first. And so we raised a little bit of capital. We bought several companies through several transactions to acquire about 250,000 acres of natural gas leasehold, almost contiguous. And I'll show you some maps in a little bit of how far our properties go. But these properties, now that we own them, we now have to go in and turn these wells back on. During COVID, a lot of these wells were shut in. Operators, it was more economical for them to shut the wells down, literally turning them off, than it was to operate them. They would lose money if they operated them. Well, now the landscape and energy has completely changed. The economies are coming back. We have shortages all over the world, and now there's this increased demand on. We literally can't turn on wells quick enough to meet that demand. And so we've come a long way. We've got a long way to go. But our next phase, and from this moment forward for the next 12 months, is to take the assets that we acquired and bring that production back on so that we can sell it, consumers can use it, and we can heat our homes. And hopefully, I don't know about where you are, but we have experienced some blackouts. It's nothing like California or other parts of the country. But hopefully, as we meet that demand, we'll see less and less in that, especially coming into the winter season.
It's a good goal to have. We know it's been an issue consistently, especially as of recently. So obviously something to work on and something we certainly hope that can be solved. But Brian, I know you mentioned a couple of maps that you want to walk through as well. We have your deck pulled up. Anything specific you want to walk through? Any slides we can point to kind of give us some context here?
Yeah, let's look at the natural gas price slide. It's one of the first slides that I included. I just want to talk about prices for a minute. Why is natural gas important, right? So oil. We all know oil, you refine it, you create gasoline, we put it in our cars. Natural gas is used as a fuel for power plants, right? So you've got nuclear power, you've got natural gas power, you got coal. The world is moving off of coal, so they're switching to natural gas. Everywhere else in the world, there's a shortage of natural gas. If you look at prices in Europe and Asia, natural gas is trading between $30 and $40, sometimes $50 an MCF. Here in the States, we've been spoiled with low natural gas prices. We're sitting on an abundance of it, but we have no way to get it to the world markets, right? So you got a market on the other side of the world that's trading at $40 to $50 an MCF. We have historically been in the $3, $4, $5 an MCF market. Those prices are going to converge. They're going to come together at some point. Well, how did that happen? Well, about 5 or 6 years ago, the U.S. really came forward in a market called LNG, or liquefied natural gas. So this is the ability. With oil, you can put it in a tanker ship or a tanker car or truck, and you can send it somewhere. Natural gas has to be sent through a pipeline. Well, what they've been able to do is liquefy or freeze this natural gas. It doesn't turn into a solid, but it turns into a liquid, and they can put it in a tanker truck or a way to move that natural gas, and they can ship it to the world market. So they're buying it here in the U.S. Our companies are making it in the U.S. for $3, $4, $5 an MCF, and they're selling it into the world markets. We've also, as a country, promised a lot of countries that we will help them alleviate themselves off of, for example, Russian gas, and we will help their supply of natural gas through LNG exports. So what that has done is it's created a market we haven't had access to before. And so what that is doing is the natural gas that we historically have used in our own country, that excess supply is not going overseas, right? So this past summer, Michael, we've seen higher gas prices when typically natural gas prices were lower, because we're not filling in our inventories. There was a economic print yesterday that showed a larger inventory number than we expected. So natural gas came down a little bit, but it's by far lower than seasonal averages. So now that excess supply, if it's going overseas, if we have if we have a really tough winter this winter, then there's not going to be enough natural gas to supply that. So we may see higher natural gas prices going into the winter, into December, January, February timeframe. So price is very important. There's also this notion that we can immediately switch to electric vehicles or some sort of pull cars off the road. We don't have enough, the grid isn't supported for that yet. And there's not enough natural gas to support those power plants to provide that energy too. So we've got a long way to go. We may not see full adoption of that in our lifetime, believe it or not, even though some people are really trying. Natural gas is very much here to stay. In fact, in Europe, they declared it a clean energy just so that they could bring more of it into the country, because other alternatives are not readily available right now. And man, people are, when people start dying, they start looking at, other sources of power that have been and that have proved themselves over time. So that's what's happening in the world market with natural gas prices.
It makes a lot of sense. It was a good breakdown, and there was a lot to what you just said to break into there. It's a huge topic, right? And I think I was going to dig into this a little bit later, but you brought it up and you went through the slides, so I want to talk about it now. When you look at the last couple of years, you mentioned this at the very beginning, right? When you're talking about the capitulation, I think you put it, of the oil market. When you're looking at the last couple of years with the COVID pandemic, we talked about this with our last guest too. What do you think are some of the fundamental changes in the industry that have come about over the last couple of years with the markets, the macro changes, the COVID pandemic? What are some things that you think have changed that are never going to go back to being the same, that give us opportunities, but also challenges and obstacles that have come up over the last couple of years?
Yeah, so it's public opinion, right? So the idea that we need to be more efficient with our resources. We need to use our resources in a more environmentally friendly way. The shift has changed in our industry. There are some smart people in the oil and gas industry. It is not archaic by any stretch of the imagination. And there's almost this shame that kind of happened. Like if you're associated with oil and gas, then you don't care about the environment. Quite the contrary. There are technologies now, Michael, that are called, I don't know if you know the term, blue energy. So blue energy is pretty relatively new term. It's essentially creating energy, but sequestering the carbon that's produced from that exercise and putting it back into the storage or to the ground so that it doesn't get released into the atmosphere. So you have green energy, which accounts for about 10% of the world demand of energy, really far away from something that we can rely on and live off of. But then you have blue energy. So the industry has created a new form of energy, the same energy, but we're able to capture that carbon and put it back into the ground. So what we will probably never go back to is the reckless, hopefully the reckless abandon of producing at all costs or drilling at all costs. Everyone is very much more mindful of new technologies that are cleaner, safer for the environment, but still reliable. We've got to have reliable power. I live in Texas. I've grown up in Texas, lived here my whole life. In February of 2021, Texas froze. It's kind of like one of those moments you look out and you see cows flying, right? There's an old saying, when pigs fly. Well, Texas froze, and for a week we couldn't move. Everything was shut down. Pipes were frozen. The following week, pipes busted all over the city. That had never happened in Texas before. And so, because of the shift or a rapid expansion of the idea of wind and solar power, which isn't quite there yet, Texas suffered. And I know that's happening in California. I just heard recently in the East, in New England and Boston, they're being braced for brownouts and blackouts, never before seen. So we've got to not go back to the Stone Age, right? We can't go back to the Stone Age for the sake of saying we're going to save the world. We may not save lives if we do that. I mean, people can freeze to death, literally. So the industry is and can take proactive steps to safeguard the environment, but still give us a reliable power that will prevent those blackouts and those dangerous situations where everything freezes.
Absolutely. Again, really good context there. I think it's certainly one of those things where it's been one of the most interesting parts of our market over the last couple of years to watch and see, and especially with what's happening right now. And I want to see if you can give us some context and some insight here, but with what's going on in Europe, right? Specifically, there's a huge amount of discussion about the natural gas and the prices, especially that they're seeing in their markets. Do you think that has any impact on the rest of the world? Give us your take on the situation as a whole. From a macro perspective, what's going on in Europe? What's going to happen with it next? And what else is it impacting in the natural gas and the oil markets?
No, great question. So everyone thought, Russia cutting off natural gas to Europe was the big event. Things were happening. That was just an extra event to the already fragile market that existed because Europe tried to transition really quickly off of fossil fuels. If you can't find a wood burning stove in Europe right now because they are worried to death, literally. In the wintertime, if there's not enough power, Russia's cut gas off. We're trying to supply them with gas. We can't get gas there quick enough. We have to be mindful of our own gas situation, make sure we have enough here at home to support us. But they are concerned, and rightfully so. Unfortunately, they're going back into coal plants and starting coal plants up as a power source. But that's also a fundamental shift. I don't believe that Russia will be let back into the international community, even if they were to say, "Hey, Ukraine, we're gonna back off. We're gonna go back home." It may never be what it used to be, where they were relying so heavily on Russian gas. And so you have Europe. The other extreme that they're doing is they're not only are they looking to bring on more power sources, but they're literally curtailing the energy use. So they're telling people you can't heat your home between a certain period of time. They're threatening to fine people. They can monitor who's using or drawing power off the power grid. So if they feel like you're drawing too much or you're drawing during a certain period of time, then you can be fined, maybe even go to jail for it. That is the Stone Ages. That's such an extreme, and unfortunately, they don't have a lot of tools to use. Absence the actual resource being delivered to their country, they have to use alternative methods to curtail that demand. I hope we never see that here. We don't need to go back to the Stone Age. We don't need to set our thermostat to 78 or 79 degrees, when it's 100 degrees outside, which also happened in this country this past summer. There's enough power. We just need to be able to, freely produce that for everyone to use. That's what we're trying to do at United Energy. We're a small player in the grand scape. We're micro cap, but this is just where we're starting. This is not where we're going to end. And so hopefully I addressed that situation in Europe.
No, again, more good insights, right? As much as any of us can. There's so much going on. And again, we spoke about this with our last guest briefly, but so much going on in our markets across industries, right? Not just the natural gas industry, not just the biotech industries, but across the market. There's a lot going on. So having some insights into what's going on in natural gas and oil is fantastic. Now, another thing I want to clarify with you too is you talk about as a company, and it's mentioned on your site and in your profile and everything else, but you talk about how it's not just about pursuing profits for you guys. It's about doing what's right for your communities, your investors, your shareholders, anybody that's involved with the company in any capacity, doing what's right for the people around you, not just pursuing those profits. Give us some insights into how you guys pursue being a socially just and also a company that's looking for the right solutions, not just pursuing profits as a whole.
Yeah. So no, hey, profit is not a bad word. I want to say that from the outset. We're a public company, so we have shareholders. We have an obligation to maximize profits, but not at the expense of the environment, not at the expense of the general industry that's trying to move in a direction that's finding those carbon neutral solutions or even carbon negative solutions where we're helping the environment. This past week, we just we talked with a methane detection company that uses satellite, literally infrared and satellite. And these satellites, rotate the Earth, every 15 to 16 hours, but they can go over our area and they can detect methane leaks or gas leaks. We have a vast system of pipelines. If you want to pull up one of our slides, I could show. I want to make sure I get this in just to show people how expansive our property is. You can get from one end to the other. It's about 60 miles from one end to the other. And we have about 1,500 miles of pipeline and transmission lines. And so this company, as a service, will through those satellites, will be able to can look down and can detect to a few hundred parts per million leaks within our system, so that we can identify where those leaks are. This is methane that's being released in the air, and then we can go in and fix those lines and repair any leaks. It's such a vast property. We have to use something high tech like that in order to keep to make sure that we're not losing gas to the atmosphere, that we're keeping it all in the pipeline that goes downstream and into eventually the buyer that then buys that production from us. So profit is not a bad word. we are responsible in how we produce. We do love natural gas in that it's a cleaner, more efficient burning fossil fuel. And we're going to pursue natural gas for the long run. We feel like even at $6, $7, $8 an MCF right now, we feel like there's an equilibrium between $15 to $16, $17 an MCF. I don't know if that's going to happen next month, 6 months from now or next year, but we feel like that's the direction that it's headed.
No, it's fantastic. I'm going to see if we can pull up your slides here for you in just a second so we can look through those before we close out. But as I'm about to get those up and pull that deck up one more time, something else I want to take a look at too, and walk us through this as we look through the last slide you want to explain here. But the key milestones that investors should be paying attention to over the next couple of quarters, but 2023 as a whole. What should investors be looking at? Walk us through the slide, take us through what you wanted to explain there, and then give us the macro look for the company as a whole next year. What should we be paying attention to?
Yeah, so go one more slide. Okay, so let's look at this slide real quick. This puts in perspective the size of our company. There's 3 dominant operators in the Cherokee Basin. So this is a mature field that's been producing about 100 years. You can see by the size, these are the 3. They're River Rock and Redbud. They've been producing now and operating for 5+ years. So they're a little ahead of us. We just came into our properties a year ago. Our production is a fraction of what theirs is, but we have the upside to meet or match their production over the next 12 to 18 months. So our milestones will be literally doubling production every so many months. And these are operations where we go back into a system and we activate a system. I hope that I hear today we have a system that's being brought online. It'll be about 300 wells that then we can put into service and get into production. We have projects like that all over our acreage where with a little bit of capital and a little bit of TLC, we can bring these wells back into production. We historically in 2005, 2006, our properties had a production of about 20 million cubic feet of gas a day. As you can see from the other 2, that's very competitive. So we're newer. We're the new kid on the block, a new kid in town. We're the only public, however. So we're going to look to continue to raise our production. Potentially even maybe consolidating with other operators in the area, so that we can really put a natural gas set of acres. We've got 250,000 acres. The other companies have 250 to 400,000 acres. That's a massive natural gas field, and we think it's a extreme value, high value, and really important to look at to see what we can do as a consolidated as a group of companies.
It's fantastic. Brian, it's been an absolutely fantastic discussion this morning. A ton of insights into what's going on in this industry as a whole, which, as we said several times, is more than enough going on there for us to have in this discussion, and I'm sure plenty of discussions
we could go for
come.
another
Brian,
20 minutes for sure.
We absolutely could, or more. There's a lot going on. But Brian, amazing insights. Thank you so much for joining us this morning and sharing what you know.
Yeah, appreciate your time. Thanks for
Brian Guin, CEO of United Energy Corporation, joining us there, giving us insights on the natural gas, the oil industries, and everything else going on in the market. That's going to wrap us for today on All Access. We had 2 companies on with us, so a shorter show. We're going to move right into Benzinga Live. Of course, before we do that, we want to thank all of the companies that come on, interact with our investors, and get to speak directly to what's going on in their companies and their markets. And, of course, our sponsor, Ticker, who sponsors every All Access show throughout the year. We're going to play that outro video for Ticker one more time to explain how you can get started earning stock perks for the companies you're invested in, and then we'll move into Benzinga Live.
What is Ticker? That's right, Ticker with 2 I's, just like you. Because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
And that's going to wrap us here on Benzinga All Access. This Friday morning, we're going to let you get into your weekend in a couple of hours here. Take a break. We'll be back with Benzinga Live at 11:30. Next week, the rest of the crew will be back. Mitch will be back on pre-market prep. Producer Rohan will be back from New York City, where they're out there doing some on-the-ground footage. Lots of exciting stuff coming your way. We'll have another interview with Anne-Marie Band, the CEO of the Trading Book, as well, coming out on Monday. We're going to be recording that today, getting into the markets and everything else going on. But until next week, on Friday, next All Access show, we'll see you guys there.